Hey everybody, this is Julie. Good morning. Good morning. It is Saturday, October 28th, and I want to take a look very quickly at the market this past week. Look at the numbers that came off of the economic calendar. Um, look at the market analyzer, higher time frame, lower time frame chart review, and a discussion of risk, which is not shown on my bullets here, but we'll end the day thinking about things to come for the following week, which includes non-farm payrolls next week and some event risk at the forefront with the political landscape. So looking at the market overall is very, very strong, very, very high momentum, as you can see here on this little template um, that I've got for you showing the E-mini S&P 500 on a weekly chart, just way up there in the stratosphere. So let's get to it. We've got a lot to cover and take a look at the risk disclosure as well as the hypothetical performance disclaimer and realize that we're looking at charts from last week. The market is closed. This is Saturday. Okay. Looking at the numbers from last week, the highlight of the week was the GDP report. And that came in on Friday at 3%. So that culminated a pretty busy week for numbers that provided some activity. A lot of the impact came in the euro with good economic numbers and good economic manufacturing numbers for us. So the business climate is showing strength and continued strength. Now, this 3%, I wanted to go down and boil into that third quarter advance estimate report, as it mainly came from this 8.3% line item, durable goods, line item 4. And if you scroll down to line item 4, you can break it down and see that they were mainly autos. And come back up here. Motor vehicles and parts comprise the majority of that. Furnishings. So that was the FEMA money that came out from Houston and Florida. So that 3%, if you had backed out that FEMA money, just the government money stirring the economy there, the GDP would have averaged a little bit lower, but I'm not saying it wasn't a good number. It's a good number, but you have to take a little bit into consideration that that was some checks out there that were being spent, and I know that that probably had an impact. So looking at the calendar ahead on the economic calendar, they are reiterating that we had good bullish momentum in manufacturing, retail sales, consumer spending a little bit flat, slows but still solid. Everything is showing that the manufacturing and capital goods flow are strengthening. Just want to keep that home sales going positive. We had a good pop last month. And keep our number on the jobs report coming out. The dollar is the big story here. It has flipped coming into anticipation of these future interest rate hikes. The dollar has turned the corner and is showing strength, as well as the euro falling. We also have the events unfolding in Catalonia, which are not helping the European currency. I would say not. And I pray for those people over there. Hope they can work out their differences and come back together as a stronger country over there. So next week, we have a lot of opportunities for trading the markets, including new home sales, um, FOMC meeting, and the jobless claims jobless claims Friday, so non-farm payroll. So we have a great trading opportunity. Let's take a look at some of the charts. I'm going to, again, start with the ES since I've got that up here. We had, as you can see, pretty strong bullish market. The high 2580 and the close 2577, so very high close, high all-time high close. But that does look like a little bit of an ominous dragonfly doji. I think that's what that is. Yeah, that's looking like a little bearish dragonfly doji, maybe. So, sorry, I was looking at some chart patterns just to confirm that. So, with all the event risk coming in with the federal indictments, and just given that we're at very high prior bounds, probably see a little bit of a pullback, I would say. But we again have some big opportunities to keep that engine moving, and so never say never on these market moves. That could just keep climbing vertical as it is. It looks pretty vertical to me. So just be careful out there, flying in those clouds. Let's look at some markets that were correlating. Maybe take a look at the euro, see if we can get some trades off of that also. So crude was the other big news item. Give me just 1 second. I'm going to take that off the chart and let's take a look at crude. We broke through the pivot finally at the May 21st high. Finally broke through that, got to test it the week of September, whatever that was, and then came back to the moving average, turned around, and now we've broken the resistance and are moving up to, I guess, a previous weekly pivot from April 15th. So we're in the middle of these two ranges now. And I would imagine that we will consolidate within that range in the near future if it doesn't, if it stays above our resistance level right there shown on the chart. So that is crude. I want to take a look at the euro because I'm expecting that market to start pulling back as it is. We've hit a little bit of resistance here. There's a level to trade to. $14,440. sorry, 15,620. Oops. All right, there we go. 15,620. That's what I would imagine we could easily visit as a target. A lot of room up here to the moving average. So careful trading the euro. Let me put up a BloodHound chart real quick. We'll put up a 15-minute. You know, anytime you can get a trade to turn around, and time a re-entry wherever possible, run support resistance of your open high low close from your previous session is a pretty good way to get back and to a trade, but you can always take these down to a even lower time frame to try timing them. Let me show you what that looks like on the Unirinco. We'll put a high-low inflections on here. Give this 1 second and then show you how to go inside the market when it is moving outside of a range in a directional manner on your lower time frame to come in and out. And you always want, of course, sell high and buy low whenever possible. Recognize which direction the market is moving at any time. Go in the direction that the market is moving in at that moment. Up or down. But hopefully you can get inside a market when it is moving one direction and then just take all the trades when it sets up for a reversal. So identifying these brief sections of time when the market does break a range, and then you can get inside that for a possible continuation for the short-term moves. And that's what the trading templates seek to do. So we're always looking for these higher time frame opportunities using knowledge of the overall market condition, using the economic calendar or market analyzer. And be careful, this definitely is looking choppy here on Friday. As you could see, the overall market was down, but the higher time but the lower time frame itself was actually long. So time your trades, take your time, trade the direction that price is moving, and you will find a way to be a part of the flow um, with the market. But obviously, it's better to trade in the overall longer term trend direction when you can find a market that is moving directionally, weekly, daily, 60, 15, and all of the other parameters are showing you, yes, you want to be going long, as you did on Friday with crude. So that's all I have for you. Be watching energy, the ES, maybe gold, um, but mainly the 6E, and keeping an eye on crude and the ES next week. And that's all I have for you. So take care. We'll see you next Saturday.